Thanks, everybody. Go ahead, Brian. You got it.
All right, so of course we have our required disclaimers. So there will be a test later. So foreign currency exchange, or Forex, which is a combination of foreign and exchange, also known as FX. It's simply the buying and selling of foreign currency. The function of the foreign exchange market is to facilitate the conversion of one country's currency into another. It sets and quotes the exchange rates. The exchange rates are the ratio of one currency to another. For example, the US dollar to the Japanese yen, or the British pound to the euro. If you've traveled internationally, you've exchanged foreign currency. You sell your home currency to buy the foreign currency, and you sell your foreign currency to buy your home currency when you return. Purchasing power changes as the exchange rate fluctuates. To better understand purchasing power parity, let's look at the Big Mac Index. This is a resource that you'll be able to find through The Economist, and it shows the various currencies and how they relate basically from the cost of a cheeseburger. It gives you an idea if that currency is undervalued or overvalued. So India,
what's that mean when it's red, Brian?
That's a great question, Jade. India in this example shows that the currency is very undervalued compared to Switzerland or Brazil, which are more overvalued, like Norway, compared to the United States.
So if I want to get a Big Mac, I should go to India.
Yeah, and this website's great because you can actually, which we'll show you at the end, change it from the select base currency of US dollar, which shows here, to any other one of these currencies and see how it affects things. And it's all color-coded with your undervalued or overvalued. So let's move on. We've got a lot to cover and not a lot of time. This shows the global economy and why Forex affects everyone either directly or indirectly. Essentially, the barrels of oil that are bought in US dollars. So to be able to even buy a barrel of oil, you have to change non-US currency into US to be able to buy a barrel of oil in today's world. Imports and exports, for example, Caterpillar, which has a huge Forex division, and they actually made more money in the 90s trading foreign currencies than they did as an industry. Uses imports and exports for their currencies because that affects their income. So whenever they sell Caterpillar equipment overseas, they've got to exchange the currencies to do that. Cross-border capital flows for investment from investors from overseas, that money all has to be exchanged. And then there's speculators, which is where we fit in, and we're a small piece of that in retail speculation. This gives you a better idea of the major players in currency exchange. The big banks, oops, sorry, I have a very sensitive mouse. The big banks and central banks, along with financial institutions, including your usual suspects, which this is an example of. It's a little outdated, but they're your typical players. Forex Fundamentals is all about getting in tune with the global economy and allowing us to leverage the foreign currency marketplace. When you better understand how the world economy works, which is getting smaller every day, you can put things together and figure out how it's going to affect the different currencies and their value. Which brings us to actually valuing currency. Valuing currency is a lot like stock, except you're valuing a country's currency instead of the company. So when we trade Forex markets, we're trading economies. Strong economies tend to have strong currencies. Supply and demand for a currency depends on the current and expected future health of a country's economy. Oh, sorry for the animation there. Currency markets have two different types. The spot market, which is immediate delivery and with the idea of it being on the spot, and forward market, which is some specified future delivery. What we focus on mostly with Forex and as a retail trader is the spot market. So that's what we'll be covering today. Forex is the world's largest financial market. It's roughly trillions of dollars per day that trades in the market. It's highly liquid compared to the New York Stock Exchange, which is a mere tens of billions, or even the equities and futures markets. So it's a behemoth. However, the Forex is simply over the counter. There's no physical trading location or foreign exchange exchange.
So where do we go to trade then?
That's a great question. Remember the chart of the big banks?
Mm-hmm.
Those are essentially the people or the institutions that facilitate the trades. The three biggest Forex markets, speaking of where we would go, is London, New York, and Tokyo. And those markets, London being the financial center of the world, as we like to say, and New York is where the most trades are done during the 24 hours and time zones. And you can see how their individual stock exchanges, New York, Tokyo's, and London, compares to the Forex market. When to trade. Although we can trade 24 hours a day, that does not mean that we should. The markets are open from 6 p.m. in Tokyo, or actually 6 p.m. Eastern Standard Time to 2 a.m. Eastern Standard Time in Tokyo. So as you can see here, these are the hours basically, and there is some overlap time, and that overlap time is basically from breakfast in New York to lunch in New York, because that's when London and New York are open at the same time.
So basically that means that's when we have the most amount of liquidity, we see the most amount of moves, and it's best time for us as Forex traders to trade, right?
Exactly, and that's why Jade is a mentor. So trading when the big markets are open are key, and being practically 24 hours, because there's 3 major markets, allows us to trade from Sunday evening through Friday afternoon in Eastern Standard Time. So Forex trades in pairs. Just like you would go to a grocery store and bring your US dollars to get a loaf of bread, you bring your US dollars to a currency trader and ask for euros. And so that's how pairs are traded in currency. You can't, anyway.
So basically, when we're buying the euro dollar,
exactly,
we're buying the euro currency and simultaneously shorting the dollar.
Exactly.
And if we're shorting the euro, that means we're shorting the euro and simultaneously we're bullish on the dollar, right?
Yes.
Perfect.
So these pairs create more movement also because of that dichotomy.
Mm-hmm.
On the left are the major pairs, which are all US dollar pairs, and on the right are the cross-currency pairs, or exotic non-US dollar pairs. These are the major pairs that we trade because of liquidity. So the most traded currency pairs are the US dollars, or the most traded currency and pairs is the US dollar, which accounts for 86% of all trades, and the euro dollar, which accounts for 28% of all trades. The euro and US dollar represent 27% of all trades, and the US dollar and Japanese yen represent 13%.
One of the big things to remember about liquidity, we're not going to really face a lot of this issue as small retail traders, but a lot of the big institutions, they have to look at these major pairs for the sure fact that if there's lower liquidity, there is a wider bid-ask spread. with a bid-ask spread, that means that simply means you're going to pay more to play.
Right, because there aren't commissions with Forex. It's simply bid-ask spread. With these pairs, you can get an idea, unlike with sectors in the stock market or futures, which has its own diversification, you can see how closely correlated the different economies and their currencies are. So this is a good chart for your reference.
So which ones are the more correlated ones?
The more, well, as you can
I would say the Aussie and the CAD, because they're more of the mining companies. You export the raw materials, and
exactly.
Then the Kiwi and the Aussie, the New Zealand, which is called Kiwi, and the AUD, the Aussie, which is the Australian dollar. They're correlated, obviously, because they're both in Asia and similar economies. The GBP is the British pound, Euro is the Euro dollar, and the CHF is a Swiss franc. Those are very correlated for the sheer fact that they are all on the same continent as well, wouldn't you say?
Definitely.
Cool. So with that said, we are done with our webinar. Does anybody have any questions? Actually, let you explain the resources.
Yeah, I'd be delighted. Thanks, Jade. Economist.com is where you can find not only the exchange rates for fundamental analysis, but the Big Mac index, which we showed you earlier, along with output, prices, jobs, things that can help you put together the pieces of the puzzle that help you understand the economies. So you
that would actually be a good webinar.
That would be a fun, the fundamentals of Forex would be a fun webinar. It's a lot of F's. But the trade exchange rates, along with the budget balance and interest rates. So, and then babypips.com is something that's a very unintimidating website that has a good tools tab on it as well. And to kind of start getting more familiar with the news of Forex, we highly recommend dailyfx.com, Bloomberg, Financial Times, and Reuters, of course. And when trying to understand the different time zones, the forex.timezoneconverter.com will tell you which Forex markets are open in your time zone.
Let them know about the upcoming HTMLT as well.
I'd love to. Thanks for asking. Let's see if we can jump out of here. So just a quick review. Everybody don't blink. That's what we covered today. Oh, shoot. 1 second. Here we go. So Jade and I have been spending the week with Steve Saminsky and Courtney going over Options University, which is why we're probably not as prepared for this as we could be.
You're doing a great job.
But we also have Master Stock Trader coming up in Los Angeles on the 19th and 22nd, and How to Make a Living Trading, which is coming up on the 23rd and 27th.
What did you cover at HTMLT last time?
HTMLT is phenomenal, and the course we're in right now is actually structured similar to HTMLT, to where you can get hands-on experience, cover the basics on the first couple days. The next 3 days, you learn some advanced techniques, and you're able to actually do some trades and get some muscle memory.
That's exactly what we're doing. So at HTMLT, that's coming up in a couple of weeks, what you're going to be doing is you're going to be learning Courtney Smith's trading techniques from him, and also his traders from his actual desk. They're going to come in 6 in the morning, market opens. You're going to learn how to do different techniques, open range breakout, which is going to help you, teach you how to make money on different moves based on news or earning reports that come out, and basically learn also day trading techniques. And what's great about it is not only you're going to learn and see his expert professional traders, how they do it, you can put these trades on live with your own money or with a demo account if you wish, and actually plug them in, so you're trading alongside professional traders, and you'll have mentors walking around to answer your questions and make sure if you have any questions, we can help you with that. So it was a really great course, wouldn't you say?
Definitely.
And that's what we're doing now with Options University as well.
It will definitely take your trading to the next level.
10x. So with that, do we have any questions?
If so, type them in. Type them in.
That's a great question. Do we actually have to go to those locations to trade Forex?
No, but I highly encourage it.
Well, that's the whole point of being a trader, is so
That's
that
right.
you can take your business and do this and make money anywhere. But no, I'm where I do my major Forex trading is pretty much in my home office. People here at the office, every now and then, after hours, they do their own trading account. So you can do it at work during your lunchtime. You can do it while you're on vacation. You can do it any city. All you need is a laptop with internet conductivity. Great question. Should we trade Another question. Should we trade correlated as well as negatively correlated pairs together for risk management purposes, or is this considered increasing risk? That is a great question. It depends. That would be the answer. So say you're bearish on the Aussie dollar. Well, if you start trading the Aussie dollar being the AUD USD Forex pair, and then you also go in and trade the Aussie yen, which is the Australia yen, and you want to do the Australia CAD, and then you want to do the Australia Kiwi, then you're taking on way too much risk because it's essentially all the same trades. Now, if you put on the pound and euro, which is the euro dollar and the British pound, that can be essentially the same trade as well. But say you have the Australia dollar and the dollar CAD. Even though they're sort of correlated, it's not so much, so you're safe to put it on. So it depends on what you're doing. If you're bullish on just Australia dollar and you're just buying all of the Australian instruments, you're taking on way too much risk. If you're doing the euro and the euro dollar and the pound dollar, what Courtney says is buy that which is strongest, sell that which is weakest. So if the euro is moving stronger than the pound, go ahead and go with the euro because that's where you're going to make the most amount of money. So hopefully that answers your question. If you want me to go a little bit more in depth, or if I'm not answering it right, let me know. Great question, Fred. Hold on a second. What is the minimum amount one should have in an account in order to trade Forex? That is a great question. I've mentored students that has had as little as 2K in their account, some a little bit less. It's possible to do, but you really need a big move to really make money because then you're going to have to worry about commissions. Now with Interactive Broker, what I've seen and I've actually done myself is I've negotiated, because I do so many trades, I have negotiated lower commissions. I would recommend for you to actually start seeing money having at least 5 to 10K, preferably 10K. But if that's not what you have, then I've seen as low as 2K work. But just be prepared to balance the amount of trades you're doing with the amount of commission you're going to pay. So if you have a smaller account, you can still trade Forex, but just focus on 1 or 2 or 3 pairs and pyramiding with something that's strong, either a strong bull or a strong bear market, and don't put on too many trades. Let me know if that doesn't answer your question. Hopefully it does. Great question, by the way.
And one of the most powerful things about Forex is the fact that you have the leverage of margin. And we'll go into that more when we talk about trading Forex specifically.
Perfect. Karen's, hopefully I'm saying that right, question is that will this presentation be available for later as a reference? Where is this presentation going to be, Brian?
Definitely. Thanks for asking. This should be available on Zendesk, and we will be able to have this available shortly.
Okay. So, excuse me, are the pairs markets open at the same time? So all the different markets, London, Australia, I'm sorry, the European, the Asian, and the American markets are not all open at the same time, as the slide that Brian did show. But the pairs, so say, for example, in the Asian market, all of these pairs that you see on the screen, is available for trade, when the American market opens up, all these same pairs are available for trade. And when the London market opens up, all of these pairs are available to trade. So it's pretty seamless, actually. If that answers your question, great. If not, let me know. Do central banks set the rates, or does the marketplace? That is a great question, Brian. You want to answer that?
Yeah, it's definitely more of the marketplace that sets the rates for this bid-ask spread. The central banks or the countries try to manipulate the currency by adjusting their rates by interest, that is, so they create more supply and demand for their currency. But it's more the market that does it.
Yes. You might have heard of the term currency wars that's been floating around the news every now and then. There's actually a book called Currency Wars. If you're interested in that or interested in this topic, you should definitely pick it up. It's a really good read. It's a really good read, and I recommend it.
Definitely. I have it on my Kindle.
Are the Forex pair markets... Oh, we answered this one already. Great. Can we trade Forex the same way we learned at FTI? That is an absolutely awesome question, Andre. Yes, you absolutely can, because all those techniques, stochastics, channel breakout, trend analysis, they are all what we use for trading Forex. Now, mind you, we have, especially with channel breakout, we have Forex and futures specific rules to tighten our stop losses because of the leverage, which we'll get into in another WB webinar. But you absolutely can. There are even techniques that we utilize that are geared more towards short-term trades and to intermediate trades, and really helping you grind out profits so that you can basically learn how to make a living. Great question. Want to answer this one? What are correlated pairs, and what does that mean? Go ahead, Brian.
Well, to quote Steve Szyminski, correlated pairs is more things that wiggle similarly. Like when you're looking at the charts, they have a similar what's the word? My diction is suddenly failing me. Basically, it means how alike they are and how likely they respond to different things in the market.
For example, if you look at this screen, the Aussie dollar and the Aussie dollar are 100% correlated because it's the same pair. If you look at the Aussie dollar and then we come across a screen to, there you go, the dollar CAD, which is a Canadian dollar, because they're both very export intense in raw materials and they very much work in conjunction with each other, you can see that they're very, very highly correlated with that. Hopefully that answers your question. Where do we learn to trade short Forex and stocks? Well, we've got a class coming up. It's called How to Make a Living Trading, and that is exactly what we teach, is how to trade being long and short both Forex, all the major pairs, as well as futures, and these techniques, for the most part, can be applied to stocks as well. Great question. At the FTI, Courtney indicated that the Canadians should open a Dorex account to compensate for change in the dollar value. How would you do that? That is a great question. I actually do not know. Go ahead and email Zendesk and we'll get an answer out to you. Let's get another question. Is it only basics trading FTI? What is the next logical step? Options or Forex? Ooh, okay, great question. So if you're just doing stocks right now, the next logical step would be to do Forex, because all the same techniques that you learn for stocks can be applied to Forex and then some. And then you get a more deeper, richer understanding of being able to go long and go short. I would not go into options just yet until you have a grasp of Forex, because once you have a grasp of Forex, you have a grasp of leverage and some of the more the short-term and intermediate trading techniques. How I tell a lot of my students is, so stocks is like your first car, your Vita car. Forex is your next car that you buy, and you go a little faster, you're a lot more comfortable. Futures is that upgraded luxury car. It goes faster, you can do a lot more things with it. And options is like an F1 Formula One car. It's really hard to really get around the bend and take the curves at a high speed if you don't know what you're doing. And it can really get you in trouble, because not only are you having leverage, which is what you can use in futures and Forex, but at the same time, not only you have to evaluate not only the stock, the fundamentals, you have to evaluate the options, you have to know what the Greeks are doing, how it's causing the movement, you have to do and construct strategies to go with it, and then you have to use all these techniques from FTI and futures and Forex that Courtney gives you and plug it all in to find the pair at the right time. So it's the most time consuming of all of the different types of trades. It can be the most rewarding financially, but you just have to know what you're doing, and you'll learn the basics more and get comfortable with them with Forex. Whereas options, there's just so many things involved. Now you have to learn how to drive stick and
a lot of moving pieces.
A lot of moving pieces, and that's what we're learning actually here this week at the Options University seminar.
And what's the beauty about Forex is, like we showed you earlier, you've only got a little over a dozen pairs that you're focusing on. So it's very simplified as far as what you can trade.
This is an awesome presentation webinar. Well, yes, it is, Brian. Great job with it. All right, if we don't have any more questions, thank you again for being on this week's webinar. We enjoyed having you. We enjoyed all of your questions, and we look forward to speaking with you again same time next week. Thanks, everybody, and bye-bye.
Have a great night.